What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for May 26, 2023. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today, again, more chop. Today, we did have GDP come out this morning. It has dropped again dramatically, but it hasn't quite gone negative. We are looking more for potentially the next quarter. Something that we've talked about, essentially saying that things will get worse in this quarter and in Q3, potentially Q3 being the worst of it. Now, one thing we did pull away from the FOMC meeting notes the other day is that there will be a recession from what they're saying, their quote unquote definition of a recession later this year. We are getting closer to Q3, and we'll be reporting Q2 earnings here shortly, which is crazy to think because we are still going through a lot of earnings. And something I talk about is you will go through earnings throughout the whole quarter. But ultimately understand that the first couple weeks, the first 3 to 4 weeks are the ones that really are impactful earnings, as those are a lot of the industry leaders, the banks, those type of earnings, and then the market kind of makes up a decision from there. And then you have earnings like last night, which we had NVIDIA earnings, which isn't something I really called out, but they absolutely crushed it. They had like one of the best earnings on the books last night, and they essentially pumped the whole market up going into today. So obviously, AI is huge right now. The problem being, though, is that if for some reason AI does not quite play out, it could be catastrophic. So all these, essentially, the 7 stocks have been held up by just mentioning AI have absolutely exploded. It would be interesting to see how that does play out in the remainder of the next couple of months here. I do believe it's still very impressive, but it is not something that's going to essentially take away people's jobs. Not at the moment. It's still a ways away from that happening, although I believe it is a great step and a great tool, just like Google was initially a great tool at one point, but now Google is kind of old news, and now you're seeing ChatGPT step up and allow people to do more with the AI, and allow them to cut down time is ultimately the thing. Anytime you can essentially create a product, right, that is ultimately can save time, that does make a huge impact, and that's what we're seeing as of right now. So as of right now, there's still a lot of information that's coming out about the debt ceiling. Huge conversation today. We started selling off heavy this morning, as you can see, but we've pretty much wicked back up, which was interesting because there was no deal in the thought that we could potentially downgrade our credit score was something that's been kind of floating over our head today. And then there was a lot of discussion that we're close to a deal, not close to a deal. There's information coming out almost every hour about the deal. Obviously, we are only a week out from there, but ultimately understand that from that, Biden had come out and essentially said that they could be this agreement on a pause for the government for the next 2 years on spending. So what does that mean exactly? It really depends on how that's drawn out. That could be cutbacks on programs. That could be cutbacks. There'll be no new projects over the next 2 years. There'll be uh, no new wage increases. A lot of different things like that will not happen. It's be interesting to see if that was happening. As is one of the alternatives to not increasing the debt ceiling would be a pause. There was another alternative as well that had been used in the past. I don't recall what it was, but this is one that Biden has brought up, saying that there's a 2-year pause on spending. And so that would be really interesting. Again, it's just showing essentially the extent in which they're willing to go, and that it doesn't typically happen unless we are in a bad state, and we are in a bad state despite what everything is essentially being reported. But this is also why innovation strives during times like this, because whether that's be the dramatic cuts or the rate increases that we've had because of inflation, understanding that the spending could help quite a bit as far as getting inflation down to where it needs to be, as well as killing demand as well. So you have to understand that there's a lot of government contractors as well, and that affects them because they just don't get paid. And essentially, they could be let go. And if that's the case, could see a lot of catastrophic things occurring from that. And so that could place a huge impact. So not only do you don't get the default, but you are feeding more into recession type territory. And obviously that's why the Fed has mentioned it, but it's something I believe we've been in for a while. If you haven't felt the pain yet, I'm sure you will soon, as a lot of people are, in making adjustments in quote unquote the real world and not what is currently going on or currently being presented as of right now. So, with that being said, it'll be interesting to see how we do play out. Again, the debt ceiling is going to be something over the next 2 days. Tomorrow we got the PCE in the morning. That's before open, so that data will be important. Again, if it feeds more into a recession type scenario, that could lead to more downside. Again, a lot of these things aren't enough or don't have enough impact on the market. Something I talked about last night was, we get to a pause on average. Typically, on a pause, we do pump on average for about 3 months, majority of the time, right? From a normal cycle, 3 out of 4 times we typically pump on a pause. But being said, right after the last rate cut, we drop like 10 to 20% on average, right? 7 out of 10 times we drop, and ultimately understand that those, or it was 8 out of 10 times, I believe it was. And so those last 2 times, the only reason we did not drop because the markets were normal enough. Whereas of those other seven essential times, essentially the bonds have been inverted at those times, and that's why it caused that 10% to 20% drop, right? And so understand that that's what we're currently looking at. Like, the state of the market is really bad, and to think that it's going to get better, we're not going to recover automatically out of here. The impact of what happens with this 20% and then potentially talking about a pause on spending, right? People are assuming that we'd go straight into quantitative easing, and if we're going to get essentially a cut on spending or a freeze on spending, that essentially could potentially lead into, because I thought we would have had some quantitative easing at some point next year, but if they do a 2-year pause or a freeze, that would kill the whole quantitative easing next year. My thesis on quantitative easing next year. So you could really kill demand. And so this thing is cascading into something even worse than I assumed it would be, and you're kind of just kicking the can down the road, hoping that everything is going to get better with Chat GPT and all these things. Now, given Chat GPT or NVIDIA is going to make out, because they are essentially the pick and shovel of this whole Chat GPT and AI that have been essentially running to where it is right now. So again, very, very interesting on what's going on. We'll have to see how this thing does play out. Again, if we get downgraded at any time, that could cause a crash. These are things you have to be aware of and know that they exist. Now, again, if we dropped dramatically, everything is very, very overextended technical wise. So if we do drop, if we could get at least a healthy pullback, I would feel confident into at least start DCAing back in, and to keep trying to. The market is like artificially pumping right now, and it can't break 4,200 no matter how hard it tries. It continues to just sit here for it's been over a month at this point, and hasn't really done much of anything. It drops, it pushes, it drops, it pushes back up, and it continues to battle 4,200. There isn't positive enough information to start pushing us back up, but there isn't bad news for us to sell off either, as we are aware that the recession is coming. And so with all that being said, we'll see where we go from here. We have to take it day by day. I know it's frustrating. It's frustrating on my side as well to see this play out, but understand that patience does pay off in the end. If you can capitalize on some of these moves, that's great. If you're DCAing, I would wait for pullbacks to DCA anymore. I know the market's come down quite a bit since the highs of the beginning of last year, but you have to also understand that uh, there's still more potential downside. And right now, as you can see, we're at the top of this channel. Like, I would wait until this comes back down to some point, get some healthy pullback. You don't want to be buying up here when you know this very well is going to have to come back at some point, at least down to the potentially the 3,900. At that point, you can start DCAing again, and then if it breaks that and continues to sell off, then DCA at levels, right, like 3,800 or 3,600. And so that's the kind of strategy I use in a lot of these different kind of moves that I do. It's not saying I don't trade intraday. I do when it makes sense. But majority of the time right now, it's hard even with options. Well, right now has been a little bit easier with options because we haven't had huge volatile moves. There's been pretty tight moves for the most part. We'll have that big move in the morning, and then that's pretty much it. And that's what I typically play. Is I'll play that morning move. If there's bad news and the market's already gapped down at the point, then it's easier to play. But if it doesn't do anything and it's sitting flat, then you can't really do much, right? Or go with the momentum of the stock. Like in NVIDIA, even though it had a massive move, there was AMD, there was some other ones that did very well. Net did very well. Snow didn't do so well as forward guidance was not good. But nonetheless, again, great company. I think Snow is another good one to potential pick up, especially after the huge drop it had overnight, essentially. So with that being said, we will continue to move forward and take it from there. So again, 4,200 tomorrow is what we're watching for top side, bottom side, 4,100. We'll continue to play this range until we get some sort of new news, whether that's be no deal. They said they were supposed to have a deal by the end of today, and there was no deal. Now, maybe that will change in the next 12 hours before market opens. But as of right now, there's no deal. So we'll see what happens there. Take a look at Bitcoin. Bitcoin, again, continuing to grind just like the market. Again, I don't think it's going to break off from the market. I think we got one big last dump before the halving in general. But Bitcoin, again, the two new presidential candidates as well that are not named Biden or Trump are quote unquote big supporters of Bitcoin. So I do believe if things align correctly, that if one of those players do come in, Bitcoin could have a massive year next year. But again, you still need this thing to die off. You need normalization on everything because, again, price gouging is still high. There isn't enough supply in the market for us to really do much. So with that being said, we'll see what happens there. Then you have take a look at gold real quick. Gold is kind of our recession gauge. It's holding this level here. The 180 is a pretty strong level. A break there could potentially see a new. Ultimately, right now, as long as it stays above roughly the 170, it's still very bullish. You can have big dips like this and then shoot back up for new highs. So looking to see if it'll break essentially the 168. If it breaks below that, then this could be heading down lower and feed more into a more positive sentiment there. But we'll have to see. Tesla, again, showing some weakness today, but then tried to battle back. Again, it needs to break over. It ultimately has to break over the 200. I don't really see that happening. This could be a lower low here. So we'll see if this starts rejecting and start coming down more. Again, it is a Friday. I believe the market is closed on Monday as well. So that'll be interesting there. If the market is closed, it'll be a short week next week. So there could be a lot of manipulation next week as well. So we have to watch for that. Palantir. Still really holding this wedge. Something I pointed out. I cut this off earlier because I was looking at the hourly. So this thing still wants to hold this wedge. So we'll see if it can open below the 1275 tomorrow. Could start selling off pretty heavy. Again, I think we're going to backfill that here pretty soon. Snow I talked about today. It's sold off pretty heavy. If I could really get it roughly around the 140 would be nice. This is, again, I think you could fill that gap at some point. I think this thing isn't completely oversold. And even if you look back, right, like when we started really selling off heavy, even in October of last year, the lowest point I got down to 110. So that is a pretty big dip. But again, if you're holding this for longer range, you see in January, we even get down to 120. So if you could start accumulating roughly around the 180, 130, I don't know if it'll make it that low. This is a nice big gap down. I do like that. So we do want to keep Snow on watch for potential a swing trade on that one. So that is one I definitely want to keep on watch. Let's see, BA again, 220, 195. If you don't know the numbers by now, again, but this thing is this thing is consolidating. This huge, there's going to be a huge, massive move out of this. And again, if the market needs some sort of meat on the bone to sell to the downside, there's your move right there. And I talked about this overextended move right here for this thing to at least drop to 151. So if there's going to be a huge drop in the market, that's where the meat of the move is going to come from. With all that consolidation, your value, I think it's synced pretty heavy. JPM consolidating a lot again, just like the market, looking forward to at least retrace back to 125. We'll see if that happens, but we'll go from there. So aside from that, like I said, NVIDIA was another one, massive rip. As you can see, this one here, this thing could pop even more from there. They were giving major upgrades to 500. We'll see if that's the case. It's just kind of held today, so this would be one to watch tomorrow. Again, if you can hold, if NVIDIA can hold up above essentially the 400, if a hourly candle, this is why I watch the hourly candles. So if you're going to get an hourly open candle above the 400 tomorrow, this thing could have a nice day. So a lot of times you'll get the break, a hold, and then the next day could have a big pop. So I do want to keep NVIDIA on watch tomorrow. The premiums for this massive rip up last night were ridiculous for premiums. So you kind of had to let this thing really die out today. We'll see where this essentially is sitting tomorrow. You don't want it to break back below the 365, or else this thing's just gonna take this whole move back down to the 305 potentially. So you really want to watch that bottom zone right there tomorrow and see what it does. But that's pretty much it. Again, don't want to make these too big. We're waiting on a bigger event. Obviously, we're waiting for something major to happen. The thing is Germany also had negative GDP, so they're officially in a recession. It's just, and this is also something that happened with with inflation, right? We saw Europe in general hit inflation peaks before we hit ours. I think you're going to see the same thing on the downside. And something I say it's important to watch Europe, because they're kind of the leading indicator for us on what a lot happens. And if we're starting to see a lot of recessions in Europe, which is very common, somebody said they've increased rates at a dramatic rate, which they haven't done in a decade. And the whole place is essentially going to go into recession, and we're going to fall directly behind them. And so that's why, again, it's important to watch them. Again, a lot of them hold our debt, and that's what's important. And a lot of people think that it doesn't affect us, but the problem is they do hold a lot of our debt. And since we are in a debt-based system, it does affect us, right? And so with that being said, we'll see what happens. Long nights, again, anything can happen. It's always a wild card. I'm half expecting to wake up one day and this thing just be down 300 points, to be honest, with all that's going on. But we see, right? We'll take it day by day. We'll take advantage of the moves. As of right now, Snow is pulled back nicely. NVIDIA is pushed up nicely. So we can watch those two tomorrow and see how they react and then go from there. So with all that being said, have a great day. See you guys later.